Right. Sound check. Yeah. I think we got sound. Yeah. Okay. We got video. That will have to do. Right. So, for the last maybe 2 weeks, I've been gathering a lot of data because of the process of backtesting outside of market hours or when I'm not trading has provided a lot of data, and it's I've been thinking about something for a long time. So this like the way a trade searching for a reverse trade when a market is outside of the session levels, um, the signal, I mean, is profitable, but it's very crude. And I've been thinking about it a lot. And so I've come to the conclusion that well, I might as well follow the actual direction of price. And if we come outside of, if we create liquidity grab, or we come outside of the market range previous session, then that is maybe a time to search for a reverse trade. And the same would be if we go beyond H1 or H4 levels, right? So I've cleaned up my chart a little bit, right? I was gonna draw some things here, but yeah. So basically, I was using signal like this. So this Asia box, I removed the outline because it was easier to see. Because it was interfering with my pins. I couldn't see where the pins were. So Asia box, right? And if we're outside of Asia box, I would search for a return trade. And I mean, it does return, right? The same way London here. Do we get a reverse signal? I'm not sure, but eventually, like, it does eventually return, right? Outside of the top. So, but until that time that we come to this place from here, it would be better to follow the direction of price, right? So that's one thing. So we get the session levels, for example, like this. We got the session levels. And if we are here, we would search for a trade up, right? Also, if there's an H1 or H4 level here, that's something that would that should tell me to change direction, right? Same with this. When we go above, should tell me to check for direction change. It should be important. The point is that, right? So that's that. And then there's the issue of the trailing, which is something that I like to do. And I have seen with the data that the trailing is not the most beneficial way for the system to generate profits. In fact, without trailing, it creates more profit. That's the most optimal way I've found so far. However, minimal trailing is the second best option, and there are several methods that can be used, and I've compared much data with that. And so for the trailing, is my log in Swedish, but whatever. The method is double level, two-wave pattern. If we add a position, if I partial out, or if new wave has no gap, then there's no power, right? So let's go over these five. Okay, so here we have box. Price goes outside, and we see there's small gap here, so that's okay. But imagine there is no gap here. So whatever trade I have on here, let's say it's short, I wouldn't be long because I would be out, right? But if I'm short here, trade creates a new wave down with no gap. That means it has no power, and that means I don't want to be short anymore, and that means I want to be flat or maybe out. That's one. Stair-stepping motion, two-wave pattern is like this. Here is a high. Here is the next cutoff. So here's another low. We come from here, right? So we are, if we are in this position, we have 1, 2. Let's say we are short from here. If we're short here, we create one wave down, we create a second wave down. Two-wave rule means that the trail stop would be above this high here. Okay. In the same way, let's use it. If we add the mentality of the double wave locking mechanism, it's like this. I'm short here for whatever reason. Price is now lower. Price comes back up. Price comes back here. Notice that, well, there's no pin here, but this is the bottom, right? And so price then touches or closes at the same time, at the same place. So the pin is at this level. There's a pin here on the white. You just can't see it. It's just too small, right? That means that this is a double low, and that means that the power was here. Power was here. This is a double low, right? And that means with the double level trail, I should be trailing to here, because the power could only come this far, and we are at the same area. In the same way, we go higher, we go down again. This is also the same level. Let's zoom in. We come here, we come back up again, we come down again into the same area. And yeah, that means that this was strong, and that means that I can trail to this point. That's to double level trailing. It's a double bottom in this case. It could be a high, whatever. Yeah, and then there's the issue of if I add another position that I may do. Let's say I have this position here. Let's say I add this position here for whatever reason, right? If I add this, then this should be locked. Flat out, right? Because this would only be added if there is additional strength. And if there is additional strength, then this should hold as well. That's the mentality of that. And then there's the rule if I partial out. For example, if this was strong, if I partial here for whatever reason, why am I partialing out? Because I think the area is important. And if that's the case, then I should be partialing out and I should be flat. It doesn't always mean that the break stop would be at the entry, but I should be flat. So if for example, it's a one, this is a 1-2, this is the level, and here, if I close half my position here, the stop can be if the stop is at half is here, half of this, and if I have two lots here, if I close one here, then this is a profitable scenario overall. Now I'm probably gonna put the stop here, but yeah, so flat or better, right? That's it. So 1, 2, 3, add partial even and new wave no power. Yes, that's all the 5 of them. And then there's the issue of the take profit, which has been issue. And so take profits, similar fashion. If I want to go, we actually need to find a reason to go long. If I want to go long here, it's a quite bad trade. No, let's use some of the good trades. Yeah, yeah. Okay, so this one, for example, here. If I want to short here, okay, right. This is the US session, this box. Could be a good idea to target this because it's over 1-to-1. One of the reasons is over 1-to-1, right? But if there's nothing real nice to target, I will look at the previous sessions, and in this case, here is the previous session level. It should be important. Previous US low session actually. So that's a 1.3. Yeah, that's probably why I put that number over there. And if that's not visible or present, as it is sometimes, I will have to look towards H1 or H4 to see if there is something obvious in the same way there that I can target. So if this was like really flat, this is more obvious to me, and I would probably target that. If we hit it or not, I mean, that's besides the point. We're talking about targets here. Yeah, so we're just gonna do because I'm doing calculations, whatever. Yeah, and so I added this indicator just outlines the range here on Asia. I don't really trade the Asia range. I just add the trades into it as if there are trades there to place. And so the model was liquidity and switch, retrace, enter in a gap if the price action formation was there. But this model outlines, I mean, almost perfectly with my direct price approach, which is, this is quite choppy. Actually, I want to continue drawing here, so let's find something else we can use. Pound. I was drawing a pound, euro. Yeah, I'm not sure how much. Let's find something fresh. Forex, CAD. Can we do this? Okay, now I may have done something silly. Let's do this. I just want something to draw some lines on. Okay, this looks good. So the idea is really right. If price has been going down, created a level. We didn't close below this, but I mean, we were here before, so this was strong. And if we close higher, then the power now is up, right? So power is up from this area or perhaps from this area, but here, right? And so we come into the Asia session, here's small gap, and that's where I can enter. And so boom, boom, boom. I see price action formation here. It's possible to enter. So we have Harami formation first, and we touch the area, right? Black with spinning top or doji. Harami, no reason to aggressively enter. And then we have engulfing formation, which is a reason to enter a market order. And are we stopped out here? I don't know. Maybe. Who knows? So the reasons to enter with the system is pin bar, for example. This white is very obvious. White with a spike, pin bar, market order. Engulfing, the one bar with a close beyond. That's also a market order. And also, like, it would also be, of course, the white with the, this is also a formation, these three bars, but we don't need to type that out in the rules because it's encompassed by the engulfing bar. Then there's the passive order entries, which are doji like this, which would tell me to put sell stop below it or buy stop above it, depending on expected outcome. And then there is the Harami as well, for example, like this. So black with white. It means power is stopping, right? This formation. So I would have a buy stop above this then for the entry. And where would the stop be? For example, if I put a buy stop here, I would have to place a controlling order somewhere where I know I have power. We had power here before, so that's probably a good idea, right? Or, well, we have here a gap. We have here a second gap. We have no gap. So at the minimum, this to here, maybe here. But I mean, this is very aggressive. And if you think about it, the energy that was here probably is used here. So probably we need to look one step beyond. So maybe to this here or here. I'm looking at these. Yeah, and pretty much it's about entering the market and trading at the minimum. For example, like I said, I know that trailing does not add to the overall ROI. However, the minimum amount of trailing adds a level of control that I currently like. And so if a trade is in profit, that means that there's no reason to further trail it, right? Other than, well, if I get some new information later on at a new level where price is telling me something else, then I may partial more out, if possible, of course. So the trade here in this example, price falls down, we come from here, or if somebody says, oh, this is the power, whatever, this is how I interpret it. We come from here, we go to here, we close higher, so we have power up, we fall back down into the gap here, and we have the reason to enter here. So like I said, at the minimum the stop would have to be here, and it's like it hits the TP, so probably I'm not, so we're on FX now, but I probably wouldn't be doing this. I probably would be using some kind of logic for like spread or something, average bar size, because this is a 15-minute after all. If I'm on something even faster, I'm definitely gonna just look at the average bar size and just gonna subjectively be like, yeah, okay, somewhere here, right? Can't really quantify explaining that, but I'm not putting the stop there. That's all I can say objectively. Anyway, so there's a trade. This is not the target. This may be the target then for this trade. And so I'm just going to do this because it's easier to see. And how would this play out? So we are now higher in price. We come from here, so no moving of the stop really. We close beyond this level, we create another gap, that means power, so we can probably add another trade here again. Yeah, probably in this US session. And it's fortunate for us that we added in the big move up, but hey, sometimes that happens, right? And so the target is probably the same way. So then there's two positions. And so like if there's any trailing here, if there's any indecision with this, boom, 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 yeah, okay. Perhaps I'm blocking the trade to flat here and taking some off here. But still the power was in this gap in London, and spinning top above, buy stop above, inside of the session, and yeah, whatever. It's a very quick rundown overview of what I've gathered recent few weeks, and yeah, that's all I got for now. I do like the concept though, where like if we go outside of the session, let me remove this, where if we go outside of the session searching for a reverse trade, I do like the concept, but it's very crude, and that part I don't like. So I would search for a reverse here, which really doesn't happen. We don't close above, right? And then price falls way down further. This is the high. Do we close above it? No. This is the high. Do we close above it? No. And then session ends, new session begins, and recent high is here. Do we close above it? Yes. And yeah, sometimes it goes like that. Right, that's all I got for now. If you like the video, like the video. If you have questions or just like to hear me talk, post your questions. Yeah, that's all I got.